All right, guys, welcome back to the channel. We're looking at 4 months of pump left in the markets. Before you get ahead of yourselves, I'm not talking about the top coming in the next 4 months. We're looking at 4 months of pumping price action. And just like we saw over 2024 with 8 months of consolidation, when you miss out on these times, you basically miss out on the entire move. What we've seen over the last few days is a lot of new people coming to the market once the price pumps. That's what we want to avoid at this time. So if you are getting in late, stick around. This video is for you. If you've been in the market for several months, maybe even recently getting in at the lows, this video is definitely for you, as we're looking at the times when the market basically moves. A lot of dead time, but the time that it moves is the time you want to be in the market. You also want to be hitting the like button, terrible segue, but smash the likes, subscribe if you haven't already. Each of the day's analysis builds upon the previous day here at your home of macro cycle analysis with me, Jason Pizzino. We study Bitcoin, cryptos, the stock markets, and the real estate cycle. A little on traditional finance at the beginning, and then we dive deeper into Bitcoin and cryptos throughout the video. But we need to get a broad perspective of the markets, and essentially the macro cycle continues to play out. We're looking for longer term moves to the upside. I've got our agenda here for today. A few things we'll recap very briefly and then dive deeper into the analysis, looking at this 4 to 5 months of pump. First things first, S&P 500, another day down, negative 0.7. Nothing to stress about here. I bring this up because I'm starting to hear a few people talk about a correction for the S&P 500. And if you are around circles of people looking for corrections in stock markets, know your levels where the trend will essentially change. The broad picture would change and basically invalidations to the macro bull market. I'm saying here, this low is in August low. If the August low breaks, whether that's the S&P, whether that's the NASDAQ, whether it's the Dow Jones, things will change. So the environment will change. But for now, I suspect this is going to be the low. So if people are looking for significant corrections here of greater than 15%, they're out of their minds. You can tell them they're out of their minds. They're not going to get it. They're not going to get it. And if it does happen, they got bigger things to worry about. They'll probably start losing their jobs. That's the big one here. So if people think they're going to keep their jobs to buy the dip with a bigger than 15% correction where you'd come in with these lows and these lows here back at 18%, they've got another thing coming. All right. The market does not give you gifts like that. You got to be with it. You got to be in it to make the gains, like we've seen with Bitcoin. So with any sort of corrections here, I'm looking basically single digits, and then 10% would take you back to the higher lows of September, which seems unlikely. Not impossible, but it seems unlikely. When we've recapped the data for the stock markets, you basically don't see double-digit corrections all that often. You've got one here in August to that low, and then the next one you had to go back all the way to 2023 to get I think it was 10 or 11% from July down to October. They don't happen all that often. People think they happen more often than they give the market credit for, to get those dips to then ride it up. Doesn't happen. Okay, so in terms of those price targets, the support I'm looking at is around 5,700. 50% level is at 5,600. So plenty of support to the downside to maintain the price structure, the pattern to the upside. Okay, so we have corrections, market moving up. Let's get on with some Bitcoin and have a look at how that volume is dropping. This, I think it's very interesting because we've been following this day after day. We saw the top, we saw the lower high, and the search volume has continued to drop off. And Bitcoin's price has basically stopped dead. We're basically just range trading between 86 and about 91, if you want to call it 92, but really the majority of the time has been spent between 86 and $90,000. And that coincides with the search volume also dropping off for BTC over the last 7 days. Overall, we know over the last 12 months, 5 years, it has been absolutely skyrocketing. What are we at now? We're at 73. So yesterday, 74, 73. This is the highest time, this highest search volume we've seen since 2021. So things are still looking rosy, but short-term slowdowns is exactly the name of the game that we've been looking at now for the last few days. And I mean, it's panned out. The extreme greed has also dropped off from 88 down to 80. So still extreme greed, but things seem like they're just slowing in the short term. That's all we've been looking for, a short-term sell-off here. And longs have been liquidated, especially after that day down yesterday, or that red day. It's an inside day, lower highs, higher lows, but it closed low. So it's a red day, an inside day. that means that longs liquidated, less shorts were liquidated at this point. Still good for the healthy movement forward. The ETFs, they're also slowing down here. We saw a peak. Here is massive, the biggest volumes in history on the 7th. The next very, very high volumes there, probably one of the top 5. You can see 12, 13, 13, 12. This one here was 12.6, so that was November 11th. And when you line that up with the days here on the chart, there is the 6th and 7th, and 11th and 12th are right there. So you can see that tons came in, and then basically the market has, in the first case, it stalled, so it wasn't able to push through. Then it got to push through, and it stalled again. So all this sort of new money's coming in, and it's stalling, sort of waiting for the next step. Now, this is probably the best segue I've got for the video. If you are still waiting for the price to move, why not sign up with channel sponsors, Bluffin, Bybit, or SwiftX for the Aussies here. The reason I give for this is if you're trying to play that game of getting in and out of different cryptos, some of the exchanges don't have all the cryptos. They've got to wait for their liquidity pools to provide more liquidity for certain smaller tokens. So in which case you sort of need to chop around from exchange to exchange, just in case you need to buy that one ridiculous dog or cat coin that you're looking for and it's not on a particular exchange. You want to jump onto the other one and easily get it before things go a little bit mental and you make pretty stupid decisions. For the Aussie market, we're at 137,000. Solana's at 324 bucks, Ethereum 4,760. The Department of Government Efficiency is at 57 Aussie cents. And if anyone cared about XRP, it's at $1.26. Oh, and the old one, the best one for the Aussies, 92 cents. 92 cents for the old ADA. So we've covered off a lot here. We're looking at Bitcoin flows. We've got the cycle and time cycle to get through. The Aussie prices are done. And the big one here, the 7 to 10 day rule is playing out at the moment. We've got 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 straight days up. Higher highs, essentially higher lows in a lot of cases. Otherwise, it's an inside day. It has not put a kink in the swing chart. We've now hit $93,500. Each of the price targets along the way using this first range out. Let's move this over. There you go. You can see that we've hit each of those and it's found some sort of resistance. So we know that this particular price extension is working. 50%, 100%, 150%, 76K. And then we got to the 250% at 92.5K. Basically has not been able to break through that. So the price targets to the downside, just small ones here. So chill out. I don't think it's going to end the bull market. Anything in terms of a break under $85,000 could send the price back to roughly around 80, 81K. That's the support at the moment. You can see each of these days have been barely holding on to 85 and 86K. So I think any sort of break there, you are going to see slightly further downside. Nothing to be too fearful of. And I think a lot of people are kind of waiting for a bigger correction here to scoop up anything cheap that they deem cheap now. But I don't know if the market's going to give it to them at this stage. We saw that last year with that just constant grind up. Remember October and November, a couple of very minor days down, and then it keeps grinding and it keeps grinding and doesn't really give that correction that they're all looking for. People typically will look back to the previous resistance levels, so it's like 30,000, 31,000, and it just didn't get there. I wouldn't be surprised if that happens again because of how long we spent consolidating between sort of your low 50s to about $70,000. It would be quite surprising, I think, if we came all the way back. Is possible, and if it does, I think you're going to see a lot of people buying up at that point. So it's not impossible, but I think a lot of people are going to step in pretty quickly if it does get to that price. Now, Bitcoin seasonality. This one we quickly looked at yesterday, so I don't need to spend too much time on this, except for November. So this is the part that I didn't go into much detail. November is the best month for BTC, historically speaking. So looking at the trading days of the year, nice big moves to the upside. December, not the greatest month, but it doesn't mean it's red. So here is about 11% returns for the month. There are some pretty significant swings along the way, and our forecast curve also shows that for late November and early December. So you can see here on the blue line, this is the actual price action for BTC, and the purple line is the halving year. We also can throw on bull and bear, and we're going to be updating this as well. So, stay tuned to that if you are a user of the TIA indicator suite. But as you can see here with the curve, towards later November, a few days down here, typically in these halving years, and then you can see that the price still climbs up, but it's not in this super fast fashion. That sort of comes later in December. So if it does pause around here and grind higher, as we've suggested, looking at say 2023 had a similar sort of pattern, don't be surprised if they miss out, or if you're waiting for this big dump, it doesn't happen, and then the market basically takes off again without you. Just be prepared for either of those scenarios. On to the big things, and we're looking at this 4 to 5 months of pump for the bull market. Not till the end, but for the bull market, not to miss out on these times. Now, Bitcoin's longer term, before I go to USDT dominance, which is actually finding support, we're looking at highs here and looking back from the cycle top to where the market breaks out. And the breakout point that I'm measuring is roughly around 30%. So you can see here from 2020, October 2020, you had a 28% move. And the significance that I find with this is that's kind of where the market first kicks into gear. Your retail investors, they get super excited by the thought of Bitcoin going up. Some of them might enter there. A lot of them typically wait, and they'll wait again. And what I've heard now, literally in just the last few days, say call it a week, is at least a couple of people say they think they've missed out on this move. And sure, it is later. You could have got in the 60s or 70s, but they feel like they've missed out on this one pump. And I think that goes to show the short-term view of the market when the price moves a little. I don't think they've realized that the market has been sitting dormant for nearly 8 months between 50 and 70K. And it's possible, but it's very unlikely that you would see this big move up and then back. And if that's the case, that's a pretty bad sign. Like the market would be, this move would be over. And basically it's, bull market done, bear market on. And so if they've missed out, if they think they've missed out at this point, wait until you get to the next months, which just power on and give this massive pump, which is the basis of what I'm talking about in this video, with these just few months of pump within the, call it the like the parabolic phase, the retail bull market, where people get excited. You guys know that this market is now 2 years old, 24 months. This bull market is 2 years old. If anyone tells you otherwise, unfollow, forget them, get rid of that. It's 2 years old right now. You have to measure from the low, otherwise you get the wrong starting point. And if any of you have built anything or worked on anything, if you get the wrong starting point, you fuck up the entire thing. And the majority of people screw it up. So the starting point is November 2022. We're not looking at shortening cycles, lengthening cycles, any of these cycles that sort of just boom up and then crash down and then let you get in here and then boom back up again. That stuff is nonsense. 2 years in. Okay, enough of my rant. Looking at this time frames from tops to the breakout point, and I'm giving you what I think is a good grasp of what the emotion was and what people are feeling and thinking at that time, which is very similar to what I think is happening now. Remember, it's my opinion. You're welcome to your own. Go and use whatever you want. But October of 2020, that was 13 months from the peak. So things started to get started there because it broke that June 2019 top, and you had the highest close in that bull market. And that bull market was nearly 2 years old. See, it was at 22 months, got to November to test the top at 23 months, basically 2 years old. So October was the start, 13 months to go, and it had the second highest monthly close in history, which is very, very big. When that thing occurs, and as we've covered here on the channel, we've got monthly highest closes in history. It was most likely the bull market would continue, but it just took a little more time in this case. So I'm saying here the move begins at month 19 and month 22. You could argue that month 19 was the breakout. You had the highest monthly close in that bull market. Took another 2 months of consolidation, and then it broke higher. That's why I'm using 2 months there just to keep track of, but we know now that it's at that 22nd month, and the 23rd month was also pretty strong, getting to new highs. And so when I measure that, and when I'm talking about with this sort of 4 to 5 months of pump, you got 1, 2, 3, 4, and then really there was one more big pump month in October of 2021. These other months, they pump, but they also dump. So if you missed it, not the end of the world. You just don't want to miss out on those 4 to 5 months of the end, the last roughly 1 year of the game. So you've been going for 2 years. You got 1 year roughly left. You don't want to miss about, 30% of that move. You got to wait around. You got to go through pain, but 30%, 40% of the time is actually going to be where the move happens. That was the last cycle. You know what I'm going to do? I'm going to show you again how that happened in the previous cycle. So the move beginning here at month 23 and month 28. So the first one I'm looking at is month 23. It didn't get to a new all-time high. It hit that somewhere around month 25, 26, 27. And then month 28 is when things got going. And you really only had 7 months left until the peak. And so you had big pump month here, big pump month there, 1, 2, 3. And that then closed pretty much off the high back down at 14K from 20K. So you had 4 solid months and a 5th half-assed month before things turned around and dumped on your sorry ass. You can see there, that was a massive month, but it came right back down. So again, you had 7 months only in that period there after it finally broke out of the tops, roughly 4.5 months to go for that cycle. And again, it happened at about where we currently sit now. That's at 28 months there. You look at 23. You could say, well, you could have another month here. So call it 5.5 months and then basically game on from that point. Now, the first cycle, 2011 to 2013, here it is. Move begins, at least what I'm calling it, month 20, month to 27. And then you had 10 months to go till the peak. So here it is. There's 27th month to the peak. There was 37 months total. So you're 3 years up. And here, looking at the breakout, you had 1, 2, 3, 4 consolidation. Call it 1 and big 2 there. So that one there, 6, maybe 5.5, 6. If I take that off and put it on linear, you can see just how extreme these months were. And obviously that month, huge month you didn't want to miss out on. That's from like $200 to $1,200 for BTC, basically acting like a meme coin, but obviously back in the history. So move begins month 20 and month 27. Let's take that back. You can see this month was a 29% move. So yeah, you could say that this one had a few more. Is it going to happen this time? I think when we look at the time frames here, that was at month 20. We're at 24 now. So I'd probably more inclined to start it from here and say, well, your best case, maybe there's about 5.5 months, and worst case, possibly looking at around 4 months, as we have seen. So if that's the case and we've used up one of these months, or this is the starting point, where's the ending point? Well, I'm just being very conservative here. Very conservative. I'm not saying the cycle ends there, but I know people will write that in the comments and I'll read it, get triggered. So go for gold. I don't mind. It also helps the algorithm. But anyway, 7 months from this month of the breakout month, I'm measuring it like I did in 2017. Big breakout month over the highs, bam, to the top. That's crazy. June. It's possible. Maybe we do hit June, right? And then we start to come back down towards the for the bear market, which might end up being longer than this one. So we might have, what's the timing there? 31 months. Could be 2.5 years instead of 3. And then you would see a 1.5 year bear market. So if that's the case, maybe that would end up somewhere around late 2026. And if this cycle is still going, which real estate tops somewhere around there, but the stock market can keep going into late 26, maybe even to 2027, maybe you would see Bitcoin rise and then start to fall into the end of that period, 2026, and then start to have one final pump as well, which would be a left translated cycle. And I think that's where it could fool a lot of the market, thinking that this is it, we're on again and we're starting early and we're going to go for another 2 or 3 years to a bull market, in which case it might only last 6 to 12 months and then fade out for the next 3 years. That timing would put the next cycle top somewhere in 2027, which would then give a 3-year bear market into, 2030-ish. You have to live out 2028, 2029, and 2020 and 2030 towards the end there. A lot of different scenarios that could come up. So we don't want to get too far ahead of ourselves. That is thinking years ahead. Let's just focus on where we are for now. That's 7 months to June. What about if we have something a little more like last cycle? We have 13 months. That takes you out to December, and you've got 10 months here. And also there was 12 months to that first breakout point there. So 10 to 12 months would take you November, and 10 takes you to September. So basically the second half of the year plus June. It's getting a little bit trickier. I've never hid that fact that bull markets aren't tricky. I think bull markets, well, the parabolic part is the most tricky because of the volatility that comes in towards the end of the cycle. I think the beginning is way, way easier. It's so much easier to see because most people are extremely fearful. They don't want to enter the market, and you just see these high lows and high lows forming. No one's trying to get in. They just think you're an idiot. And then when you start to get this breakout, it gets a little bit, well, the trend becomes clearer, but things get a little bit crazier. So I'm never hiding the fact that I think the bull markets are the hardest. I just have to keep following the trend and sharing it with you here online. So USDT, we've got that in terms of the 4 to 5 month pump. We can also see it with ETH, as I'll show you in a sec. But I just want to have a look at the support that's coming in here for USDT dominance. Right on time, right at that upwards diagonal, which is called every other Bitcoin top, Bitcoin all-time high, intermediate tops. It seems like it's attempting to do it again. Now, this isn't confirmed. I'd want to see a swing and then it start to break higher. So for now, it's just a short-term support for the USDT dominance. Next up is the total cryptocurrency market cap, biggest volumes in history. Taking a look at our agenda here, total crypto market cap, ETH 4 to 5 months pump, and then the volume as well. The total cryptocurrency market cap is finding some resistance at $3 trillion. Should this get going again, you can see the same sort of thing here. 1, 2, 3, 4, call it 5 and 6 in this case for the USDT dominance. That was last cycle, and we don't really have too much other data to work with here. You got 1, 2, 3, 4. And you could argue that that's the 5th month in there as well. So when it gets going, you don't have much time to sit on your hands. So if this does get a little bit boring over this next, towards the end of the quarter, this whole period, don't sit on your hands. Just, unfortunately, you got to be watching the market every single day from this point, or just set your orders so you can have more time to go do other things and set them as the market starts to break out, and obviously have your other stops in play in case the market also breaks down. The true altcoin market cap, again, similar thing here, the 4 to 5 months of pump. We're approximately here. And what do we have left? 1, 2, 3, 4. You could argue that this is the 5th month. You could argue that that was the 5th month, big pump and a massive correction. Up to you. What I'm saying is you have roughly 4 to 5 months of the pump, and then you are basically over. You've got nothing left after that point. Again, the argument could be said that you've got one more month here that exceeds the top of the previous month, because this month here, yes, it was a pump month, but if you were in with these 4, you've endured the correction, and then even though the market pumped, you're basically back to square one with your profits if you are still holding through this whole point. So you either have paper profits at that level, or you get in late, therefore you have no paper profits and you basically break even, and you have one more month left before the end. So something to keep in mind throughout this phase. I guess it might sound a little bit doom and gloomy, but this is the time to make the money. Don't get too excited with how things are playing out and everyone telling you just to jump in on everything and dump your money and you're going to retire your bloodline, as I often hear. ETH BTC, I'll end on a positive note. That I do promise you. Hit the like and subscribe button. We're not ending here, but if you want that positive note, I've got it there. It's sitting there. All right, so ETH, we could be coming towards the end of this move to the downside. I'm looking monthly here, so there's 30 days in a month. Therefore, you got to give this thing a little bit of leeway. We're looking at 42 months from the peak to the, in this case, the higher low before the pump. And right now we're at 42 months right now to that last prior peak, or the last prior major pump. And into that pump, you had 1 month, you had 2 months, you had 3 months. And that was essentially it. You could class that as a fourth correction. It came back, but basically it kept failing at about 8% of Bitcoin's value. Go on this big long decline here, and we're now at month 42 since that first, or the first initial pump phase and the excitement into that peak of May 2021. It really didn't come back after that. I don't think anyone disputes that for the second half of 2021, although prices did go higher. Volumes were down across the board. Search volumes were down across the board. Prices barely went higher for Bitcoin and ETH. And basically, it was just a bit of an altcoin play until everything faded out. You had a couple of months left and the game was over. So we're coming up to that point now. Maybe we get this turnaround. We have to see prices for ETH BTC get back above 0.045. So basically 4.5% of BTC. And if that's the case, roughly 5% of $90,000 is about a $4,500 ETH. So 4.5% of where we are, call it around a $4,000 ETH. That's where ETH needs to be in order to get back into a position of strength on the chart. It's currently sitting at 3,100. 4,000 will put it back above these highs, and that could then set the play in motion for much higher prices this cycle for ETH. So there's your first piece of bullish news at the end of the video. The last thing are some price targets for Bitcoin. But before we do, don't forget the Black Friday sale is coming up. Subscribe to the free crypto and economic report and you'll be notified when that sale goes live for TIA Premium. So BTC, price targets ahead. We've hit the $90,000. The first range that we're using is here, and that next price target is around 98. So we've had a couple of prices around $98,000, $96,000. Obviously the 100K is there for the psychological level. So you're getting a bit of a price cluster here in the high $90,000. The next points above I'm going to use are the first range out, and then we're projecting those, all these lines that come out this far. And that we've hit basically 400% at 90K. Price is now currently trading under that. The 500% point is 106, and then a really nice looking one here is around 122. I say really nice because each of these reference ranges projected off their respective lows come in at 122, and they're very interesting numbers that have worked previously on the market. Yesterday we looked at how this range projected 6 times and hit that exact top from the low here. So basically mathematical points in the market that are calling tops and bottoms. Now, it is a bit of an art, and we have to be a little bit flexible with the prices and follow the chart just in case it doesn't hit it. So I like to put in that disclaimer because people get a little bit too carried away saying that the price has to hit this. Not at all. The swing chart is the key. Breaks down, screw it, game over, get out, okay? But for now, those targets above, I'm liking the look of around 122 because it's 6 times this range, and we've seen 6 work before, and it is 150% of this range here, and 150% are good areas to look at because it's an extension of the reference range, and that's typically what happens in a strong market. The last thing to note about this is if it happens too quick, expect a pullback or a pause. So you can see that this angle is getting steeper and steeper, but there's still more time to go in the cycle. If that time runs out in June, but the price gets there this month or next month, it might take a little bit more time, another several months, tap it again, and then the game is over. And then just extend that if you think the cycle, or we start to see signs that the cycle's running out in October and it hits it next month. Maybe it has a little bit further to go to the upside, but if it hits these levels too quick, you'd probably see price take a bit of a pause, or, I mean, the worst case scenario, or the worst feeling, especially if you're in profits, is some sort of significant correction. But we'll continue to follow up with all of this on the channel. Like, subscribe. I'll see you guys back here at the next video. Hope you had a fantastic week. And if I don't see you on the weekend, have a fantastic time as well. Till then, take care and peace out.